The Fresh Start program was updated and its name was changed to the Fresh Start Initiative in 2012. It was a much needed adjustment to the guidelines used by IRS agents to determine a taxpayer's eligibility for the program, which is designed to allow a timely resolution for back tax debt. Not only did it make the program easier to qualify for, but it also shortened the time it would take to resolve this debt. For example, an offer in compromise, or OIC, typically lasted about 4 or 5 years before 2012. Today, the adjustments made resolve the debt within as little as 2 years. This was the Internal Revenue Service answer to an increasingly struggling economy at that time. Projected earnings and allowable living expenses were also a part of the 2012 update, allowing taxpayers a little more of their income to cover additional monthly expenses. Additional expenses like credit card payments, student loan payments, and payments on delinquent state and local taxes are now considered when an agent determines an affordable payment amount. The IRS Commissioner commented at the time, "It is part of our multi-year effort to help taxpayers who are struggling to make ends meet." What is an offer in compromise? An OIC is a written agreement between the taxpayer and the IRS to resolve their back tax debt, including interest and penalties due, for less than the full amount owed. The changes in the guidelines for an OIC essentially allows taxpayers a path to repayment, even if their OIC agreement results in a lesser paid balance at its conclusion. However, if the IRS determines that you have a way to pay the full debt by liquidating an asset like a boat or a second home, they're more likely to reject your OIC proposal in favor of this method. As I mentioned, the agent guidelines for use of projected earnings were also updated in 2012. Before 2012, agents were instructed to use 4 or 5 years of projected earnings for the future when determining payment affordability. If your OIC includes a lump sum or an installment payment plan that will last 5 months or less, they'll now consider just 1 year of projected earnings. If your OIC includes an installment plan that lasts from 6 to 24 months, only 2 years of projected income will be considered by the IRS. No installment agreement longer than 24 months is acceptable for an OIC. Asset considerations changed in 2012 as well. Income-producing assets were no longer included in collectibility determinations as of the 2012 update, along with other strict guidelines. If you're seeking a simple installment agreement instead of an OIC, you'll be happy to know that changes were made to those guidelines too. The federal tax debt limit for an installment agreement is now $50,000 for an individual, up $25,000, and $100,000 for businesses. Regardless of which part of the Fresh Start Initiative you opt for, installment payments must be paid by the monthly due date and be for the full amount or more than the agreement specifies. Or the IRS may terminate the agreement and the balance will be due immediately. Before 2012, installment agreements could be no longer than 5 years. However, this has been changed to 6 years, giving the taxpayer more of their resources for monthly living expenses. Should a taxpayer experience additional hardship during the agreement period, the IRS provides temporary relief for individual taxpayers and self-employed taxpayers alike. This 2012 update is still in effect today, despite the improvement in the economy. Payments need to be made to the U.S. Treasury in the form of a personal check, money order, credit, or debit card. Talk to your tax relief professional if you'd like to explore other payment options, such as wire transfer or an electronic funds transfer. No cash payments are accepted. Are you interested in learning more about the Fresh Start Initiative? Find more information on our blog or reach out to a reputable tax relief professional.